Welcome to the Deep Dive. We're the place that takes all that dense corporate data and turns it into, well, the clear insights you need to get smart, fast.
That's the goal.
So today we're digging into Motorola Solutions MSI. You've given us quite the stack: Q3 2025 earnings call transcripts, SEC filings. It really paints a picture of a company in, well, rapid transition.
It absolutely does. This isn't just, running through the numbers. It's about seeing how MSI is shifting, really pivoting hard from mostly hardware to being this powerhouse built around software, services, and now AI.
Okay, let's unpack this then. Our mission here is to kind of distill that core story. We're going to zero in on how they're actually funding and pulling off this shift. We'll look at, say, three main things.
Sounds right.
Right, the acceleration in software and services, or S&S, then the immediate splash from that huge $4.4 billion Silvus deal, and finally, their push into AI-powered safety tools out in the real world.
And the top-level summary, it's pretty compelling. Management literally called Q3 a really strong quarter. I mean, record revenue, record operating earnings, and it's important, record operating cash flow.
Strong signals.
Definitely. And it gave them the confidence to raise their full-year EPS guidance again. So, yeah, a quarter showing really solid execution.
All right, let's get into the nuts and bolts of the financials first, because these numbers, they really translate directly into strategic muscle, don't they?
They do. So net sales up 8% compared to last year, landed at $3 million for the quarter. But like you said, revenue is only part of it.
Right, the quality of that revenue.
That's maybe even more critical. The non-GAAP operating margin, it actually expanded by 80 basis points, hit 30.5%.
Wow, 80 basis points. That's nearly a full percentage point jump, right?
Exactly, which is pretty substantial when you're talking billions in revenue. And it's that efficiency boost that drove the non-GAAP EPS up 9% to $4.06.
And the fuel for the future. Cash flow. You mentioned record cash flow.
Yep, a record $799 million in operating cash flow just in Q3. That's up $40 million from last year.
And the sources really emphasize why that matters, don't they? Predictability, funding for M&A, R&D.
Precisely. Which leads us nicely into the backlog.
The backlog. That's always a key indicator for MSI.
It's the forward-looking indicator, really. And it's a huge statement about this transition we're talking about. They ended Q3 holding a record $14.6 billion in total backlog.
$14.6 billion, that's up, what, almost $500 million year over year?
That's right. But here's the real kicker, the qualitative shift. $11 billion of that massive number is now specifically software and services backlog.
11 billion. Okay, that's the metric showing the change.
That is the key metric, because this isn't just potential future sales. It's basically guaranteed high margin, really sticky revenue. It smooths out those hardware cycles.
And it's driven by things like command center software, video solutions, things that need ongoing service contracts.
Exactly,
right?
long-term agreements. And you see that quality reflected if you look at the segment performance.
Yeah, S&S was the clear growth leader, up an impressive 11%.
Undeniably. Products and systems integration, P&SI, that was solid too, up 6%. But you see the gap widening. S&S is the main engine now.
And it's not just happening in North America.
Good point. North America grew 6%. Solid to $2.1 billion. But international, that grew much faster, up 13% to $888 million.
13% internationally suggests the solutions are really hitting their stride overseas.
It does. And they gave a specific example, didn't they?
Yeah, that $10 million mobile video order in Bulgaria for the Ministry of Interior.
Right. And the interesting part, Bulgaria is now the 18th European country using their mobile video. So they're systematically winning market share region by region.
So if we circle back to the margins for a second, that 30.5% operating margin, how did they pull that off, especially with tariffs being a factor?
Yeah, that's fascinating. They openly said, yes, tariffs increased costs, but margins still went up. It really points to strong operational efficiency, strategic moves like dual sourcing, accelerating inventory.
And using that USMCA compliant manufacturing footprint.
Exactly. Plus, the simple fact that more of their revenue mix is coming from that higher margin software. It's giving them some serious operating leverage.
Okay, let's pivot now. Let's talk about the big investment, the one that's sort of reshaping their network capabilities. That $4.4 billion they spent back in August to buy Silvus Technologies, that's a huge check to write.
It is a massive outlay, but Silvus looks like a truly strategic buy. Not just a financial one. They're specialists in mobile ad hoc network tech, or MANET.
MANET. Okay, break that down for us.
So think of it as a software-defined mesh network. It kind of heals itself if a node goes down. And critically, it allows secure data, video, voice, all without needing any fixed infrastructure. No cell towers, no satellite links needed.
Ah, okay. So disaster zone, remote military operation, anywhere the normal comms are down. Silvus radios basically create their own secure network on the fly.
That's the idea. A huge capability gap filled right there.
Makes sense. And they've now rolled this tech, along with their traditional land mobile radio stuff, into a new segment.
Right. It's all under this broader banner now. Mission Critical Networks, or MCN.
And Silvus is already beating expectations, it seems.
Blowing past them, actually. Their 2025 revenue forecast bumped up from $475 million to $500 million.
And wasn't there a specific reason for part of that Q3 boost?
Yes, they mentioned a $25 million order that got pulled into Q3, specifically helping operations in Ukraine.
Right. And the strong start is boosting next year's outlook, too.
Significantly. They're now projecting 20% revenue growth for Silvus in 2026, and that's off the higher $500 million base.
20% growth. Impressive.
And maybe even more telling, the earnings contribution expected in 2026. They initially thought maybe $1.20 per share. Now they're saying $0.36 to 40 cents per share.
Wow, okay. That's fast payback potential.
Yeah.
But still, $4.4 billion. Did the sources talk about integration risk? Or, hitting those growth targets, especially in defense?
They touched on it, yeah. Mostly framed it around market demand being really strong and also good cultural fit.
How so?
Well, strategically, they pointed to the unmanned and autonomous systems market as a huge driver. Things they saw confirmed at defense shows, like AUSA, defense, borders, that's the focus for 26 and beyond.
Okay.
And culturally, they said the due diligence showed a really good cultural chemistry around innovation between the Silvus folks and the core MSI team, which, can often be the make or break factor for these huge deals actually working out.
Makes sense. I like that real-world example they gave, too, the Ryder Cup one.
Oh, yeah, the Streamcaster radio.
Using them not just for voice, but piping live HD security video back to the command center.
Yeah.
Shows the tech works under pressure, right?
Exactly. Robust, high-speed data in a real-world, high-stakes setting. So circling back to the core software and services business, that 11% overall growth wasn't just one or two big wins. It was pretty broad.
Right. MCN was strong. Command center software was up 16%. Video up 13%.
All contributing nicely.
But beyond that core S&S growth, the really exciting part, the thing that gives it that long-term power, seems to be the shift to cloud and the AI applications.
Absolutely. Take Vigilon Alta, that's their cloud video solution. It's growing, get this, over 4 times faster than the overall video segment growth rate.
4 times faster than the segment's 7% growth in Q3.
Correct. So the move to cloud for public safety, for enterprise security, it's not slow anymore. It feels like it's really hitting that exponential part of the curve.
And that leads right into the AI story. MSI keeps talking about their new body-worn device, the SBX, not just as a camera, but as a, quote, body-worn assistant.
Yeah, that framing is key. It's designed to help with workflows right there in the moment.
And the examples they gave were pretty striking. Less about tech specs, more about impact.
Totally. Like that anecdote about using the SBX's real-time translation feature to de-escalate a domestic disturbance.
Yeah, that really stood out. That's an immediate, potentially life-saving use case, way beyond just recording.
Exactly. And they're pushing the software adoption on the admin side, too, very quickly. Over 1,000 customers are already using Assist for Digital Evidence Management, or DEMS.
1,000 agencies adopting it already. That suggests they see real value fast.
Immense value in automating tedious stuff. The AI redaction and reporting tools, they cut the time needed to share critical info by over 80%. 80%.
Wow. And the assisted narrative feature.
Even more impactful for the officers, maybe, cuts report writing and revision time by over 50%.
50% less time on paperwork. That's huge. That's not just efficiency. That's giving officers potentially hours back for actual policing or community engagement.
Fundamentally changes the job, potentially. And importantly, this AI assistant tech, it's tightly woven into their main radio platform, the Apex Next Radio.
So they talk to each other.
Seamlessly, which unlocks new things, like using the SBX to, say, call in a Brink drone for first response DFR directly. The body device becomes an active coordinator, not just passive recording.
Okay, so with all that functionality, where are they on deployment? Still early days.
Relatively early, but growing fast. They expect to have 300,000 Apex Next units in the field by the end of 2026.
300,000, and the total U.S. first responder market is, what, 2 million?
Around that, yeah. So still a massive runway ahead for this AI integration, loads of potential. So Wrapping things up, we should probably touch on the bigger picture, the market environment they're operating in.
Right, the macro factors. We talked about tariffs already and how they seem to be managing that through sourcing and manufacturing strategies.
Yep, hedging against those costs.
The other big one is government funding. Looks like a mix of tailwinds and some potential short-term risks there. We should cover both impartially.
Agreed. On the positive side, the tailwind. The sources mentioned that new government bill, the OBBB Act, passed in July, focused on border security, national security.
One big, beautiful bill act, right?
That's the one. MSI sees that as a definite positive, providing clear funding streams for their government customers over the next few years. Makes selling easier, basically.
Okay. And the potential headwind. The U.S. government shutdown situation back in October.
Right. They address that. They do sell to federal agencies, DOD, DHS, places like that. But they stressed that the vast, vast majority of their public safety business is with state and local governments.
So less direct impact than you might think.
That was their take. They said they're watching for any Q4 revenue timing slips, just in case. But overall, they expect minimal impact on the business itself.
Got it. And there was one other sort of financial item in Q3, a non-operational boost.
Ah, yes. The Hytera litigation. They actually recognize a $74 million gain in the quarter from money recovered in those legal battles over trade secret theft.
$74 million gain. Nice little bump to the bottom line, even if it's a one-off.
Definitely helpful. So all this performance, this context, it fed into their updated guidance.
Which was, they kept the full-year revenue target the same, $11.65 billion, about 7.7% growth.
Correct. But, crucially, they raised the full-year non-GAAP EPS guidance again, lifted it to between $15.09 and $15 per share.
That raised EPS forecast, that's the real vote of confidence from management, isn't it?
It really is. And they're already signaling, anticipating another strong year for revenue and earnings growth in 2026, driven by continued margin expansion and the momentum in both S&S and that new MCN segment, #TagOutro.
Okay, so what does this all mean for you, the listener, trying to track this company's transformation?
Well, I think it means MSI is really executing on a deep, pretty fundamental shift. Software and services, it's not just growing, it's structurally the main engine now. You see it in the 11% growth, that huge $11 billion S&S backlog.
Right. And the Silvus deal isn't just some future bet. It's immediately pulling them into hot markets like defense and autonomous systems.
Exactly. And critically, that investment in the AI ecosystem, the SBX assistant, it's already showing tangible, measurable benefits. Things like officer safety, massive efficiency gains, stuff that agencies are clearly responding to.
Absolutely. We saw the SBX proving its value quickly with things like real-time translation, cutting report time in half. But let's connect those dots for a final thought. The total U.S. first responder market is huge, maybe 2 million people. They're aiming for 300,000 Apex Next units, the platform for SBX, by end of next year. Does this incredibly fast, practical adoption of AI features mean the actual penetration rate for these devices could accelerate way faster, maybe exponentially faster, than old LMR radio cycles? What does that highly automated AI-assisted public safety market even look like in, say, just 2 years?
That's a fascinating question. I mean, if you can genuinely save officers 50% of their paperwork time, that value prop feels like it could be the ultimate accelerant, doesn't it?
Something to definitely mull over.
Indeed.
Okay, that's our deep dive for today. Thanks for joining us.